The halving of Bitcoin in 2024 is an event that will divide the block reward for mining Bitcoin in half. This significant event occurs every 4 years and is seen as a major milestone in the cryptocurrency world. The halving of the Bitcoin stock has the potential to drastically affect the market, as it has done in past years. In this video, we will discuss the potential impact this event could have in 2024. Before starting, don't forget to like and subscribe to our channel for more future updates. So let's start. Since it was first launched in 2009, Bitcoin has steadily risen from obscurity to become one of the most popular digital coins on the market. This has been made possible by its decentralized and oftentimes anarchistic structure, which restricts third-party interference. But what makes Bitcoin so successful? That's where the power of the halving comes into play. When Bitcoin was introduced in 2009, each Bitcoin was worth $50 US. Now, a single Bitcoin is worth over $10,000 US. So how does Bitcoin retain its value? The answer is, through the process of halving. Every 4 years, the number of new Bitcoins mined is cut in half. This process will continue until all 21 million Bitcoins are mined, so it's incredibly important. What is the halving of Bitcoin stock? The halving of Bitcoin stock in 2024, also known as the halving, means that the total amount of new Bitcoins available for mining will be reduced by half on July 17, 2024. The protocol for Bitcoin was designed in such way that its underlying blockchain technology reduces the reward associated with mining operations by 50%. As a result, the amount of new Bitcoin released every 10 minutes will be cut in half. This process lowers the rate of supply growth every 4 years, with a specific halving date every 4 years. The last halving of Bitcoin happened in 2020, marking the 6th time a 50% reduction has been seen for the miner reward. The 2024 halving story won't be the same, bringing even more uncertainty and chaos around the already unpredictable cryptocurrency market conditions. Why is this happening? This mechanism, which discourages the production of new Bitcoins, was put in place to compensate for the incredible advances of hardware technology, which means that it takes fewer resources today compared to when Bitcoin was first introduced. It serves as an essential trade-off system that prevents the overflooding of the market with new Bitcoins. At the same time, the halving of Bitcoin stock in 2024 also affects the miners' profits, since their returns are intrinsically connected to rewards such as Bitcoin's miners get sent to their wallet for successfully verifying one transaction on the network. Again, think of miners as still the very essential promoters of the extremely important decentralization scheme of a distributed network. People involved: there are two major players when it comes to the halving of Bitcoin stock in 2024. The first is the setup of miners who maintain the blockchain. This group also governs coins, and each Bitcoin generates when miners successfully verify transactions. The second consists of the nations and individuals who invest in Bitcoin, since they too benefit from the increased scarcity of a coin, which leads to an increase in its value. These two players, by participating in the marketplace, contribute to the establishment of prices and the circulation of the coins. In turn, they both bear the consequences of the halving of Bitcoin stock in 2024. Who does the halving affect? Just like the previous halving event in 2020, miners and investors have the most at risk when it comes to price volatility. But the records generated in the last 5 commercial halvings do seem to suggest that investors will fare better. Miners, who acquire 50 new Bitcoin blocks every 10 minutes during the very organized 10 minutes order control mine size reset message channel communication, are immediately affected by the reduction in rewards for mining recordings transaction operations. The reduction in mining reward has a direct effect on parallel mining processes, SPM, and almost significantly predicted profits for the 4-year timespan. The vast majority of the near 10 million currently trading Bitcoins, as of 2021, come from speculators and investors. They too get trialed and tested when demand for the locked value spikes while the supply reduces in size due to the halving incident. The most worrying implications are borne by those so-called speculators and who could collapse due to an overall dip in prices. Just like the bubbly exchanges of 2017, which reigned after a slight recovery window around April 2019 until roughly May, we could see chaos again in the agricultural market of traders come 2025. Impacts of the halving on Bitcoin. From a technical perspective, the halving of Bitcoin stock in 2024 is predetermined and is coming up soon. It could have significant implications for both serious miners and casual investors in the forms discussed below. High price volatility. The sudden drop in Bitcoin's rate of inflation protects its intrinsic false model and makes speculators think irrational even, thus generating confusion through the marketplace. Investors take reckless bets and currencies rapidly increase and vanish, making rational investing strategies harder to extrapolate. One-off price surge. 4 years BTC recorded an insane dip of 15% right before or after 4 separate recorded halving events, so it's not an anomaly already that strong speculations will drive Bitcoin's price up. Reports suggest a strong bull run could take the value of Bitcoin to the unreachable heights of $100,000, an incredible amount. Time most potential boosters face harsh disadvantages with but which means rich venture capitalists can net insignificant long-term capital gains. Frequent price corrections. As stated above, the more well-growing aegis or shelter growth instinct activates drastic risk-intense slippages during a given halving point. Earlier results suggest Bitcoin losses will be hypervisible come August, especially with the MTLD dominant increases or crude oil madness blocking market tests, network clogging changing the material market situation or demand intrinsic gap demands continues negotiations repeated adjustment with network confirmation decreases until predictions regulate speeding transaction clearance regularity easily. BTC underwent a series of intense mining delays as competitors responded cognitively to the price jump. From the introduction perspective, it's estimated that around 8 to 10% of the 100,000 transactions in a day were rejected, ranging from easily scrutable options like advanced encryption standard ciphertext and to simpler decentralized finance models. The slowdown effects varied from peripheral points for over 40 exchanges to actual Bitcoin transactions ground to a slow move and settled close to withdrawals made later. Compatible databases. Transaction record lost. Digital core element records theory. Increase in minimum rate as Bitcoin expands its mainstream recognition beyond decentralized infrastructure to centralized sphere. Medium or low discount coupon. Wage earners prefer to pay full amount for speed, asset or the benefit nature of the mining project, saving here after model payment when buying lately may. Expect the unexpected in 2024. Historically, Bitcoin's bear and bull markets showcase chaotic and erratic behavior. They generally display heightened levels of instability when halvings come around. This phenomenon is of particular urgency when it comes to 2024, since although on-chain analysis, developers' intelligence, and miners' data appear to act as predictors, past precedent suggests that certain random forces of disruption can disrupt even tried and tested predictions. Consequently, like 2021, a big blast could bring trends reversed with unfortunate consequences for those on the front lines of the crypto industry, but a newfound goldmine created for involved spectator gamblers. Lastly, with concerns around quality assurance and security gradually increasing due closer cryptocurrency token integration place a state volatility risk management emerges. The halving could represent a possible academic tool for crypto space. Cryptocurrency driving school. Region in mining and fiat currency sect potential front. The original paper and links leading all the leading intermediaries. Monetary guidance publish information sources guide coming too. New advancements. Traditional monetary policies in e-money scale to predicted global post-fiat banking platforms by investing in self-active crypto trading specialist artificial technology. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.